Hi guys, this is Lee with the Market Sense for the week of February 16th, 2021. The charts in this presentation come from the Trade Navigator software. It's put out by Gettess. And this is a weekly bond market chart, and you can see we got stuff happening here. They have broken down clearly below. Well, first of all, let's go to resistance. We were kind of looking at 166.29 as being potential resistance, and really it should have been higher than that. It should have been 67.28 because they didn't really close below everything last week. But that's the lowest potential resistance, 66.29, and you can see they haven't been anywhere near that. The 165 level here we determined has been important for months now, and they've broken below that. The only thing really disheartening, disappointing, I don't know what you want to say about it, they broke below that level when the U.S. was closed. That's ugly, nasty. Can't really participate, in my opinion. But they have continued to trade down there once the U.S. did open, so it seems to be a real break. But, you really couldn't do much about it, unfortunately, because the U.S. wasn't trading at the time. What this leaves us is there's a level of 162.26, which is the swing high that the market broke out above when they had the big rally in early 2020. That swing high, if you want to go back and look at your charts, is from back in August, September 2019. That's how far back we're going. That seems like the logical area to be support for this move. They don't necessarily have to get there, but they sure look like they want to, and how they behave when they get there controls what else we've got going. But that's what I think. I think the next downside target is around 162.26, and I would be looking for reasons to buy if they should get down there this week. It might be a little scary, but it also could be really profitable. In stocks, sort of a similar situation. This upper level, I don't want to call it resistance because it is a new all-time highs, but the target up here at 39.55 was also reached before the U.S. actually opened because we were closed on Monday. And that, so do we believe it? Do we think that counts? That's always a tough call. We're looking at support here in the 38.95 area as the highest possible level. Really, the best support would be around 38.25, although with us being through Tuesday, it's hard to imagine how they could get down there and still look attractive for buying, but that is actually what the support calculates to. It'll be interesting to see if they do hold up here at the 38.95 level, or even if they get there, because obviously they've had no problem blowing through stuff on the way up here for the last couple months. And just because they've traded up here and sold off doesn't mean they can't turn around and break back above that 39.55 level. I really don't know what to expect. I honestly believe that the weakness in bonds is spooking them a little bit. And for what it's worth, that's a really interesting deal there. Obviously, the Fed doesn't want bonds to go down, but they can only buy so many of them. And if there's a fight, I guarantee you the market's going to win. If the bond market really believes they should be lower and interest rates will be higher, that's what'll happen. And Powell and the Fed can go pound sand. So that's just a fascinating thing to see there. But I'm getting off track. This is the QQQ, the ETF that represents the Nasdaq. And we have a relatively similar situation. They didn't actually blow through everything last week, so this 33.11 kind of shouldn't be support, but it kind of looks like it could be as well. The upside target here is 338.88. Sorry, I'm having trouble getting my mouth to work. 338.88 is that upside target. And again, I wouldn't call that resistance because it's at new all-time highs. It's just a target where you could take some profits if you happen to be long, and an area to monitor if they turn down without getting there or after trading there. The best support, 326.67. You can actually see the number just above the price here, right that middle moving average there. That's really the best support this week, except that would mean taking out last week's low after being above last week's high, and pretty hard to sell that as looking bullish, isn't it? So Maybe they'll just consolidate this week. I don't know. But you just look at the market. Look at everything on the chart here. If they get down to the 326.67 area, you have to consider buying it. You just have to. This market isn't a bull move until proven otherwise, and they've certainly done nothing to prove otherwise recently. So you got to look at support as a potential reason to buy. So that's what we've got for you today. I hope you can find something profitable to get yourself into, and thanks for checking in to see what we're looking at.